Bitcoin isn't just another investment, it's a revolution. Over the past decade, it has outperformed every asset class, turning skeptics into believers and early adopters into millionaires. But here's the kicker. The next wave of growth is just getting started. With institutional giants stepping in, post-halving scarcity kicking into gear, and global uncertainty pushing investors toward decentralized assets, Bitcoin is primed to skyrocket. In this video, I'll break down 5 powerful reasons why Bitcoin could multiply 8x in value in the near future, and why you don't want to miss out on this once-in-a-lifetime opportunity. Like, subscribe, and let's talk Bitcoin. 1. Institutional adoption. Institutional adoption is one of the strongest signals for Bitcoin's growth, as it introduces substantial capital and credibility to the crypto market. Over the past few years, we've seen major corporations, hedge funds, and asset managers integrate Bitcoin into their portfolios. Corporate adoption, companies like MicroStrategy, Tesla, and Square, Block, have added Bitcoin to their treasuries to protect against inflation and economic uncertainties. For instance, MicroStrategy holds over 150,000 BTC, showing a long-term commitment to Bitcoin as a reserve asset. Tesla invested $1.5 billion in Bitcoin in 2021, signaling confidence from one of the world's most innovative companies. Institutional investment vehicles, asset managers such as BlackRock, Fidelity, and Grayscale are pushing for Bitcoin exchange-traded funds, ETFs. A Bitcoin spot ETF would allow traditional investors to access Bitcoin through regulated markets, which could trigger billions of dollars of inflows from institutional portfolios. Approval of ETFs in Canada and Brazil has already demonstrated significant interest. A U.S. spot ETF, anticipated soon, would be a game-changer for market liquidity. Banks and payment processors, global banks like Goldman Sachs, JP Morgan, and payment platforms such as PayPal and Visa have incorporated Bitcoin into their systems. This move reduces friction for retail and institutional investors to access or use Bitcoin. Why it matters: institutional adoption creates legitimacy and increases Bitcoin's liquidity. As institutional players enter the market, they hold for the long term, creating supply shortages that drive up price. 2. Limited supply and post-halving scarcity. Bitcoin's supply dynamics are a cornerstone of its value proposition. Unlike fiat currencies, which central banks can print at will, Bitcoin has a fixed supply of 21 million coins, a feature enforced by its protocol. Historical price impact of halvings. Every 4 years, Bitcoin undergoes a halving event, reducing the reward for miners by half. This cuts the rate at which new Bitcoin enters circulation, creating scarcity. Past halving cycles have resulted in significant price surges. 2012, halving, price rose from $12 to $1,150, it's 9,500% within 12 months. 2016, halving, price surged from $600 to $20,000, 3,200% in 18 months. 2020, halving, Bitcoin climbed from $9,000 to $69,000, plus 660% in 18 months. The 2024 halving effect. With the recent halving in 2024, mining rewards dropped to 3.125 BTC per block. This reduction in new supply is significant, especially when paired with increasing demand from institutions, retail investors, and global adoption. Given historical trends, the post-halving phase is expected to create an explosive supply-demand imbalance in Bitcoin's favor. Shrinking available supply. Over 90% of Bitcoin has already been mined, and millions are estimated to be lost forever in inactive wallets. This further reduces the circulating supply. Why it matters. Bitcoin's predictable scarcity, coupled with the impact of halvings, mirrors the dynamics of assets like gold, but with greater transparency and security. Scarcity-driven demand is a key driver of exponential price increases. 4. Advancing technology and ecosystem growth. Bitcoin's ecosystem has evolved significantly, enhancing its usability, scalability, and accessibility. Lightning Network. Layer 2. The Lightning Network enables instant, low-cost Bitcoin transactions. This addresses Bitcoin's scalability issues and makes it practical for everyday use, especially for micropayments and remittances. In regions like El Salvador, the Lightning Network has enabled seamless Bitcoin payments for businesses and individuals. Integration with traditional systems, payment platforms like PayPal, Visa, and MasterCard now allow users to buy, sell, and spend Bitcoin. This bridges the gap between the crypto and traditional financial systems. Infrastructure and developer growth. The Bitcoin developer community is growing rapidly, improving wallets, exchanges, and security protocols. Innovative solutions like Bitcoin ordinals, NFTs on Bitcoin, are driving new utility and adoption among creative markets. Accessibility. Retail investors now have easier access to Bitcoin via centralized exchanges, ETFs, and mobile apps. This growth in infrastructure fuels adoption at a global scale. Why it matters. Improved technology and ecosystem growth make Bitcoin more practical, scalable, and accessible, increasing adoption and demand. 5. Regulatory clarity and global acceptance. Regulatory uncertainty has been a barrier for Bitcoin, but governments are now moving toward clearer frameworks. This shift reduces risks for businesses and investors, encouraging adoption. U.S. spot ETF approval. With institutions like BlackRock leading the charge, a Bitcoin spot ETF in the U.S. seems inevitable. This would allow institutional investors to access Bitcoin through familiar, regulated financial products, potentially driving massive inflows. Government acceptance. Countries like El Salvador and the Central African Republic have adopted Bitcoin as legal tender, providing real-world examples of Bitcoin's utility as a currency. Other nations are exploring Bitcoin for remittances and financial inclusion, especially in regions with underdeveloped banking systems. Regulation in favor of innovation. While some governments remain cautious, global trends indicate increasing regulatory acceptance. For example, the European Union has introduced MiCA, markets in crypto assets, regulations to ensure investor protection while supporting innovation. Countries like Japan and Singapore have embraced Bitcoin-friendly frameworks, attracting businesses and investors. Why it matters. Regulatory clarity removes uncertainty and builds trust among institutional and retail investors. It opens pathways for mainstream adoption and integration into global financial systems. Conclusion. Bitcoin's potential for an 8x increase is built on solid foundations: institutional adoption, post-halving scarcity, macroeconomic instability, technological advancements, and growing regulatory clarity. These factors collectively create a supply-demand imbalance that historically leads to explosive price appreciation. Bitcoin is not just a speculative asset, it's becoming the global standard for digital wealth and financial sovereignty. I hope you found this video helpful. We'll appreciate if you hit the like and subscribe. Till the next video, stay safe.